Ravi from Zynga. Let's take a few minutes to introduce the panel.
Hi, Manish here, CEO of Nazara, which is the, as you guys know, only listed gaming company in India. Happy to chat.
Hi, Rohit here, founder of 99 Games. We build mobile games that people love to play for years. That's it.
Hi everyone, Alexandre Salem, Senior Vice President for Operations at Stillfront. We have here a few colleagues from Moonfrog, our studio in India.
Hi everyone, Mohan from the London Stock Exchange Group. If any of you are wondering why the hell the London Stock Exchange Group is at a gaming event, it's because we have 10 listed gaming companies with a total market cap of $4 billion on our exchange. Thank you.
Welcome everyone. So let's have a question to the audience first. How many of you are either in a gaming startup, forming a startup, or working in a gaming startup here? Okay, lots of hands, yeah. So great to see so much interest in startups. And obviously when you do a startup, there is always one eye on, right, how to give a good return to your shareholder. And that's where the whole journey and the final exit comes in. And that's something what we are going to discuss a bit about today. So we'll start from the very beginning, as it's the journey of the founder. So let's talk a little bit about the gaming ecosystem in general and in particular in India. We can go around the room and talk about how it's looking right now and how you see things happening in next 5 years.
Yeah, I think one of the good things about the ecosystem is it's always improving, year after year. My personal experience this year looking at the crowd here at IGDC is that there has been a marked improvement in terms of the quality of the games that we have, at least I have seen personally. I think that is changing. We have 2 gaming specific funds now, I think 3 probably. There is Lumika, Ventana Ventures, and I think Game 24/7 announced a fund yesterday. It wasn't the case. I think in the last 2 years we had 2-3 strategic buyouts, one of Moonfrog, one more of Play Simple, and I'm talking only about non-RMG space here. And I think, I know it's the ecosystem is improving, more developers are coming, but overall it's a very nascent ecosystem of a lot of first-time founders, and I think the energy is fantastic this year.
So at Stillfront, we've been looking at the Indian market as a huge opportunity for many years. We talked with a lot of companies, conducted a lot of due diligence, and we finalized our first acquisition through Moonfrog in February 21. It's an acquisition we are very proud of and which is a great fit for us. We are extremely optimistic about the Indian ecosystem opportunity. It's one of the fastest growing gaming markets in the world in terms of audience, in terms of monetization. It's already the 2nd gaming market in the world in terms of downloads. We see also a huge competitive advantage in this market, which is the talents, the availability of very high caliber developers specifically. And of course, also for an international entity like ourselves, regulation and stable regulation is very important, and we believe this is something which is very attractive in India as well. For all of those reasons, we believe that Moonfrog is just the beginning. So it's a platform on which we want to build more, and it's just the beginning of our journey in this market.
So guys, I think few things which I have seen in last 13 years evolving here is first and foremost the quality of these indie teams, which is really coming up. It's amazing. And yesterday in the award ceremony, I was seeing a video of the game which was created by students, and I was blown over, completely blown over by the quality. And they said they made it in 40 days. I said, man, this is the new benchmark for a lot of established studios, large studios, to really kind of reset their own productivity and quality benchmarks. So I think it's amazing time for us in India to really look at such amazing, passionate people coming and building games. And I think as a gaming industry, if you kind of really create a very strong content which people love, we are in the business of IPs, we are in the business of soft power, and India can truly become a global powerhouse in building content. And that's what really excites me. We have a huge market. Our own domestic market is very big, and it is growing and growing fast. The second theme which I'm seeing is a lot of content being created around Indian stories, Indian themes. And I think that's something which happened in China long, long back. We have a very rich culture, rich heritage, rich stories. It will take time. It's not that it's going to really evolve tomorrow, but over the next 4, 5, 7 years, very high quality AAA, AA games being built on Indian stories is what I'm seeing the green shoots today with some of the studios which are happening. And the third thing is with the whole infrastructure improvement in internet of quality, stability, all that, and with 5G around the corner, the massive growth which we will see in multiplayer competitive games in India and esports. And next door, we have a consumer event. I can clearly see that in next 4, 5 years, there'll be buses flying from different parts of the country coming for those consumer events. And that will further kind of infuse energy into this whole ecosystem. And what we are seeing today is amazing energy which charges me personally. And that is going to be turbocharged in coming years. That's it.
Thanks a lot, Manish.
I would like to echo Manish's sentiments. I'm not a gaming insider. Obviously, the industry, some of the aspects of the industry are somewhat arcane to me. But while we were preparing for this, I read that there are about 500 million active users in India now. That's a third of the population. And I read that in the last 28 months or so, there have been like $2.5 billion worth of funding, which is coming in. So obviously, the gaming sector is going to be a global powerhouse, as Manish just said. And this sort of attracts institutions like mine to come and meet you at a very early stage of your development and then shepherd you through, right through to whatever exit that you divine for yourself. Thank you.
Sure. So let's say somebody feels that the ecosystem is at the right place, things are building up, the funding is available, and somebody wants to take a plunge. So maybe I'll start with Rohit, right? What would be your advice to an entrepreneur who is starting to build their first game today?
I think first of all, have a good team. I think that's the most important thing. If you have a well-rounded team, one good tech guy, one good strong art guy, one product guy knows how to dabble with the economy and all. I think a very strong 4 or 5% team is a fundamental requirement for a very good gaming studio. And second thing is a genre focus. Whatever you're doing, be very sure about what you're trying to do. Okay, don't try to build too many things or too many stuff. Do that. Third thing is speak to a lot of mentors out there and veterans out there. I think a lot of us are there. We can tell you from our experience what parts to avoid. Make new mistakes. Don't repeat the mistakes that we have made. Fourth thing is there are many funds, small size funds that are available. I think they bring in their own kind of an expertise. I think these are a few key things that you should look at. Genre focus is the most important. Team, have a good bunch of team.
Yeah, I fully agree with the team components. It's extremely important to have the right capabilities, but also the right kind of cultural fit among the co-founders. And in addition to that, I think, when we screen early stage companies, I am always looking for 3 kind of values. One is passion, because it's a very hard journey. It's a marathon to be an entrepreneur, not a sprint, and you need to have the passion, otherwise it sets you for failure. The second thing that I believe is very important is humility. You need to have the humility to learn from your mistakes, to kill projects which are failures very fast, and to iterate very, very quickly, and to build on failures to go into a success. And last but not least, responsibility. This means that as an entrepreneur, your actions have an impact, and we are looking for people who are accountable and who are willing to accept that they have agency, and whatever decisions they make, they need to reap the benefits or to get the punishment for the bad decisions they make. So that's what I call responsibility value.
If you're serious about it, set aside 5 years of your life for going, giving it a good shot.
It's a multiple attempt thing.
Sorry, just to add one thing, I've heard it's been said here in forums such as this, like, focus on what your skills are and on what your advantages are as far as development goes. But I would just add that don't hesitate to think big, because as an exchange, our journey began in 2005 with this company called Party Gaming, and 2 of the 4 founders were Indians, right? So they had $1 billion IPO in London. They had Party Gaming was a site which had a lot of poker games which were online, and they had a wild rocky ride for 10 years on the London Stock Exchange. They were also part of the FTSE 100 for a short while. And what struck me at that time and what still strikes me now is that there's always been an Indian element in these kind of things. So there's Anurag Dixit and Vikrant Bhargava were 2 really brilliant founders of that particular company. And if you look at their example and what they did and what they achieved way back in 2005, that should be inspiration for everybody.
Okay. So great insights over there, guys. When you are jumping in it, you have to jump in for good. Like Rohit said, put 5 years of your life. It's not something you'll get right in first attempt, but if you persist, if there is perseverance, there is a way to get through it and be successful over here. So now let's go ahead in the founder's journey. Let's say you have found out 2 or 3 good co-founders, a few friends, a few engineers, you start building something. I think next big thing comes is how do you raise capital? So I'll again like to go around the panel and ask. Obviously, there is a obvious general VC has been there. You could go to someone like Sequoia or something. But obviously, times have changed and there are many new avenues. So what are some interesting ways of raising early funding so that someone can get started?
So in gaming, I think it's an iterative process. There are 2 things which, in my opinion, are important. Talk to people who give you freedom to fail, freedom to experiment. Do not take money from people who are going to be asking you, you gave me a timeline, has the game come out? No, timeline will not be followed. So if somebody is kind of really looking at the clock and seeing how much money have you burnt, how much money have you really spent, have you kind of got that outcome, that's a wrong person for a gaming company to really be your partner. Because you also need investor to be having that decision of 5 years. It's not just an entrepreneur. The investor also needs to have that mindset, because the risk and reward are being shared between entrepreneur and investor. And I think a lot of investors forget, and they think entrepreneurs are just a slave drivers for them. No, that's not the case. So you are also kind of really taking that punt along with the founder. In terms of raising your money, I would say take something which will give you a 12, 18 months, 24-month runway, so that you have the freedom to fail. And think again what Rohit said is that what am I making, for whom am I making, and what is my most lovable product which I can get out. And that money which you need, let's say 10 rupees, take 1.5, 2x of that so that you have freedom to fail. And then go about it. You really do not need, unless you're building a distribution company in which you need to get consumers and all. For a game development, you will get that. And the good thing in India today is there are a lot of excitement around backing such ventures through dedicated either gaming focused or a lot of angel networks and other places where you can really kind of raise that money. So if you have a very clear-cut thought process, last but not the least, for investors to visualize what you are making is very important, right? So make some kind of your own video or your own animation or something of that sort. Gaming companies should not do PPT pitches, in my opinion, because we are an experiential product. That's what we are selling. And if you could really kind of create a nice workable prototype or a video very, very nicely, people can visualize and appreciate what they're doing, because they're also, when an investor is reacting, he's also reacting somewhere in the mind as consumer. So these were my thoughts.
So in terms of investment sources breakdown, so I would make a typology. As you obviously have, especially at the very early stage, families and friends. So it's a source which might be available for you. Then, depending on where you live, at the local or federal level of government, you might have access to some funding. So I am personally from France. It's something which, for big successful companies like Voodoo, it's quite often started through a government loan or grant. A third source is definitely basically VC. Ravi, you mentioned Sequoia. I mean, Sequoia has been active in India these last few years, but it's just one of them. And usually VCs have a value proposition of not only helping you to fund your business, but also to equip you with a lot of best practices and networking advice. And last but not least, you have the opportunity also, but this typically happens a bit later in the development of your company, to be acquired or to merge with a strategic player in the gaming industry. And within Stillfront, that's how basically we grew the company to a 23 studio business. So we usually have a value proposition to the new studios that we acquire, which is to bring them into our network and to make sure that they retain their leadership. So for example, Moonfrog, which is represented here, still has exactly the same leadership from before the acquisition. They still keep their products. We don't have any green lighting of their products. And we add some capabilities at the central level, such as marketing. We have also, like, we can support in terms of finance, in terms of HR, but we also can help in terms of expanding into new geographies or with the web shop. So avoiding like to have very high platform fees, we have this capability internally.
Yeah, and India is a very nascent market. And one of the things that I have particularly noticed is there's a lot of talent, a lot of teams. I think there's easily 1,000 plus gaming teams in the country. They are good in a few areas. I think they will put together a really great game, but they don't know how to go about really pitching it or positioning it. Things like that. I think knowledge of analytics is very less. So they are great in certain aspect, not so mature in certain other aspects. And I think handholding at that level, helping the early stage founders or founding teams with what they need to do in the first 6 months or 12 months of their post early stage funding round is the most critical aspect. I have seen personally over the years, and Manish probably you might have seen it too. A lot of teams start off so much of energy. They try very hard for the first several years, 2-3 years, and by the time they get to a particular stage, they're already so exhausted and they don't have a funding option available to them, and they kind of disappear. And I think having those early stage funding might be a great opportunity for these founders, because there is somebody out there to hold them in those early stages, and there will always be the Sequoias of the world and the Matrix of the world, or whoever it is, to help them in the Series A or pre-Series A stage. But I think this industry right now needs a lot of seed or pre-seed fund to just tell the founders that, hey, look, what you're doing is really good. I think you should keep at it, keep focusing, help them with a framework kind of a thing for early stage companies, and I think that will do magic to this ecosystem.
Yeah, in fact, the world is changing so much. I mean, now, institutions like us, we are seeing a blurring of, the private and the public markets. Soon, as my CEO goes to say, like, from next year onwards, probably, and an institution like mine, which has a 350-year-old history of actually dealing only with public companies, is now, we are going to be agnostic between private and public companies. For example, I mean, like the kind of options that we have nowadays, the traditional ways you start funding yourself with your family and friends, then you go angel and seed and, venture capital rounds, private equity rounds. Then you have either a strategic sale or IPO. But now, for example, we have invested in a platform called Flow. And Flow at the moment connects startups with VCs. But we are going to, introduce, hopefully next year, uh, a public market element to that. So we are going to have private companies remain private but raise public money from investors. And we'll also have a mechanism where there are equity shares, because they have to issue equity shares to raise money, right? Which will be traded in a manner very much akin to what happens in a public market. So, there are a lot of options like this. Of course, we have markets like AIM where we see fairly early stage companies who want to go public, come and go public. But everything is changing nowadays. And this is something that, the industry as a whole should be like, always keep in touch with. What are the changes, not just within the industry, but what's happening and how you're going to be funded going forward.
Just one thing here, those of you who are wanting to really are passionate and have a very strong community, and if you don't have build that community as you're in your process of your game development, because that really is your army which is trusting you, which is passionate about you. And if some of you want to really kind of build that community, want to really go, the route I believe is the Web3 route of raising money from that community through your tokens. And if you are having your own tokenomics, which is very clear, really kind of cuts all this noise which we spoke about of the 20, 30 years of the way fund has been raised. And you can really directly connect with your community to raise that initial money which you are wanting to do for that experimentation. And those guys become your evangelists, and you can continue to build your tribe and keep raising money. I think that's the beauty of the Web3 model today. If you are clear about your tokenomics and utility of tokenomics and how the economy benefit is being shared with your community, you can directly do that.
Thanks a lot, Manish. I think the one conclusion I derive from this is that when you are looking for funding, right, you're not just looking for money, but you are also looking for mentorship. So like Rohit said, right, going to the right people who in addition to money can provide you with that guidance, help you set up those systems which will let you be successful in longer term. I think that's absolutely critical. Obviously, if you have more than one options, always go for the one who is going to provide things in addition to money. Now, Manish, you brought the Web3 thing, and I think that's one elephant in the room. As entrepreneurs are starting, right, people are thinking about which genres to choose, and you have things like free to play, and then we have things like Apple Arcade, and then we have Web3, which was like really hyped up till just a while ago, and now it has cooled down. So people are in two minds as to, is it still relevant or not? So maybe you can touch upon a little bit.
So I think in your sentence, you conceptually mix 2-3 things. Free to play is a business model. Whether you do free to play, whether you do subscription, whether you do paid, whatever it is. So that's the business models. The blockchain is a technology element which is really intuitively helping you on 2-3 things. And if you understand those 2-3 principles and you are incorporating them in your game design, in your game economy design, in your consumer thinking, the game genres, which is the other term which you used, whether it's an FPS, racing, match, RTS, SLG, CCG, those genres and mechanisms remain same. The business models are there. Now, in those business model, how the take rate is being shared between you as a game developer and the gamer who is creating, that's the fundamental difference which blockchain really enables. And if you are clear in your mind that that's the route you want to do, then you will use blockchain. But fundamentally, from a game development initial stage point of view, honestly, it doesn't matter, because you need to really build your game which is fun, which can engage people, which can retain. The only beauty and advantage which you get is you get a community which is aligned with you, on day -5 versus having a community building in Web2 through users, through your viral, through influencers, which happens on day +30. So it's a day -5 journey, which you are creating your tribe, as I mentioned last time. That thinking, if you are able to weave into your game design, game economy design, it will help you. And that's the role which blockchain plays. The last 2-year hype was that people were creating games for speculators. And that is a bull run, bull behavior. People will come in. However, the advantage of that bull behavior was that the ability and demonstration of that ability, that what blockchain can do, is very clear. Now, if you are a passionate game developer which is here for next 5 years, 8 years, you will build those games for gamers and not just speculators or traders. And I think that's the shift. When the froth really moves out, you get good teams which are building, and that's what I'm seeing globally, what is happening.
Thanks a lot, Manish. Alexander, some thoughts about genres and Web3?
Yeah, so I really agree with what was said. I believe that it would be too simplistic to say that Web3 is just a new business model or just a new way to monetize. It's much more than that. I believe it has the potential to reshape entirely, not only gaming, but even the tech as in general. It has the potential of changing the paradigm. It has the potential to make people translate from being users, passive users of an economy which would be designed like traditionally from developers, into being active members of an economy. And very concretely, this means that, and we already see some examples in the Web3 space, like we could imagine that in a given game, a player would be rewarded through tokens or an NFT if this player has reached a certain performance at a given level. A given player could be also rewarded through tokens or an NFT if she or he cross-promotes the game to a couple of friends. So it's really has the potential to aligning incentives between the developer and the player. This doesn't mean that it was not done in the past. So obviously, we know that in the Blizzard game, for example, some people were accumulating virtual currency and in the background were selling those assets. But this was not legal. Web3 basically makes it into a systemic market where you can get in-game assets and trade them for cash. And this is a revolution potentially. Within Stillfront, we are still very, we are very humble about it. We need to test, we need to explore, we need to learn from other professionals. But we are very excited about the opportunity, and we will have exciting things to announce in the next few years.
That's great. Rohit, maybe you can talk a little bit about real money as well, in addition to other genres.
Yeah, I think real money is something I don't really, have a lot of expertise in, or have dabbled much in it. To folks like us who are coming from a very classical gaming background, I personally I feel that real money gaming is not really gaming. It's probably something very different. I think maybe I should stop at that.
So definitely, as we say, right, there are a lot of ways you can choose your genres, and like Manish put very well, right, Web.3, even though the hype is a lot less now, probably it is the right time of really understanding it and benefiting from the power of technology as well as community. So definitely it should be somewhere in when you are selecting what you want to work on. Now moving ahead, so far we have talked about somebody trying to make a game or multiple game till one game that's successful. But what gets acquired is not a single game, but it's like a gaming company, right? So from your perspective, we can go around the room and talk about like what makes a company acquirable, right? Something which will be interesting for an investor. And what should an entrepreneur keep in mind from probably very beginning as a goal to create an investable gaming company?
Okay, I can start. I would say when we look into targets and we conduct the due diligence, there are always four questions that we try to answer. One, on the financial performance side, is this company going to, I mean, does it showcase a historic track record of healthy profitability and positive cash flow generation? We are not interested in turnaround situations, and we only look after companies with a very strong P&L and cash flow statement in a steady manner over the last 3 years at least. So that's on the financial performance side, number one. Number two, management expertise and track records. So we want gaming experts who work as a team and who are happy to be collaborative with the group. Question number three, it's around the game genre. So historically, Stillfront is a company which has built a very diversified portfolio, but with one common theme, which is loyal players with long lifetime value. So we are, for example, not historically active in hyper casual. It's not because we don't believe in hyper casual. It's a very attractive part of the business, but it's just a very different piece of the market with a very different type of know-how and skill sets. So we typically go for games with a longer life journey. And last but not least, there is a cultural fit element, which is very important. Obviously, when you have 23 studios with their own P&L, having to work together, it's very key, absolutely instrumental to make sure that the people you bring on board will be fitting into the puzzle and will be working in a collaborative manner. And that's also something that we constantly check during the due diligence.
Yeah, one feedback I have for early stage founders or founding team is nail your game. And I think it's very important to take it in stages. Make sure that you take one game and get the monetization in. Figure out the acquisition channel, retention channel, the events system, the live ops event system that you build into the game. This is for freemium, the free to play games. If it is a hyper casual kind of a studio, there are a bunch of companies that look for acquiring those companies. But if it is a free to play kind of a game, it's all about genre focus. You should focus on a genre, be really good at it. Because the global gaming market is so huge, you can easily take a game from a 50K per month revenue to 100K, 100K to 200K, 200K to 400K, and the learning differs with each of these stages. And if you are able to play that game once, you can replicate it in the same genre with another game a lot more quicker. But focus on doing it with one game. Don't try to go and build too many games. I've seen that again. We have done that mistake in the past, and I see that a lot with the newer founders also. They build a game, and within 1 year they want to build something new, and then they say, look, my team is feeling bored. I want to do a new game. I think you should figure out something new to tell the team on sticking to that game, but make sure that whatever you are doing, scale it. If you are able to demonstrate scale and demonstrate a track record, generate free cash flow, nothing like it. And if you have the numbers, Manish will readily agree. I think people will come and invest in you, buy you out, and all those things. And because we are all in the Indian market, one of the most happening markets, both from a gaming perspective, both from again from an overall economy perspective, investors will beat a part to you. Okay, but get your basics right, and speak to a lot of other founders, other industry veterans. I think that's very important.
I think I always, whenever I talk to a lot of teams, I say make your dashboard. 12 months later, what are the numbers you want to hit? And once you have put those right KPIs, that this is my DAO, this is my MAU-DAO ratio. If you are thinking that it could be monetization, this is my ARPU, this is my retention number, which gets captured in DAO MAU ratio. Just put those numbers very clearly in your head. And then talk to people, if I achieve these numbers in this genre, am I going to get my check? And once you have kind of get those numbers, then go break down them into month and month dashboards so that you are very, very systematic manner, you are really focusing on that outcome. 99% teams keep focusing on their day-to-day operations, but they don't have a clarity that why would somebody really listen to my pitch? Why would somebody really find me attractive? Why would somebody eventually give me check? And if you have those clarity of outcome in your mind very, very clear, your conversation with potential investor becomes so easy because all you need to send is your game video and this data, right? And then just write 3 blurbs about you and your team. I think that's one slide is the attention span which any investor has. If you can get that 2-minute attention from him or her, then only the second level of due diligence discussion can happen. So please make your own outcome milestones and talk to industry people that if I achieve this, do you think I will be able to do that? Second thing is your story is important. People really see that when an investor comes in a particular round, he thinks that, am I securing my investment for future? Will this team be able to raise money in the second round or third round or fourth round? Because ultimately I need a return. And what's your story? Is your story differentiated? Like when you think of a gamer, gamer should keep coming back again and again. It's like that. Investor thinks, can this founder or this team narrate a story to impress people? Assume that numbers are there because the second round of investment, third round of investment, your level of competition will keep becoming steep and more difficult. So is your storytelling is important, and can it be really impressive compared to the set of founders which the next set of investors are meeting? So focus on outcome, focus on your sharpening your story and keep evolving it. And that evolution can only happen when you meet industry people, when you meet other guys. These are the forums where you should come, seek out people, tell them this is what you're doing, get the feedback so that next time when you meet another guy, your story is better. So that's what I would kind of advise you.
I think what this gentleman has just said, I mean, the same, almost literally applies ditto for public market investors. You have equity stories, you have growth, you have management quality. The only caveat is that I think public market investors are a little bit more unforgiving. If you don't meet your numbers quarter on quarter or 6 months on 6 months or year on year, than private market or private investors. So that is again, something that you have to take into account at the time when you decide an exit. The choice again is between like an outright sale or a partial sale, and of course going public.
Thanks a lot, Mohan. I agreed that it's the matter of creating a great company that gets acquired or merged with other company. It's not just a single game. Obviously, nailing your games is really important. But like Mohan said, if you're going in public market or even if you're getting acquired by somebody, they would like a consistent return. So probably having a great management structure, probably having a set of games so that even if one has an issue, other one can make up for that, and so on is really important if you want to reach there. Now coming to probably the final question and the most important question, right? Means of exit. So in the recent times, we have heard of many things, right? Obviously, public IPO is one thing, and most of the people don't understand at what stage you should be or what are the prerequisites or how to approach it. But in addition, we have heard about things like SPACs. We have think about outright acquisitions or strategic sales. Obviously, Indian public markets and so on. So maybe we can start with Mohan and then we can go around the table to see where various means of exit that are available right now.
So as far as public markets are concerned, of course, traditionally there have been the one route which has been an initial public offer. But now in the last 2 years especially, we've had this whole SPAC revolution come in. And I think the results have been pretty mixed. I think primarily because, the SPACs just became, it just became a fad. And there were too many of them, too many raised. The kind of companies that they de-SPACed with were probably not right for public markets. And therefore, we've had this whole phenomenon, especially in the United States, where, where at the time of de-SPACing, All investors have exited the SPAC, so the amount of funds that were promised to the to the acquired company was not exactly what they were expecting. And then after that, a lot of companies who've become public were not ready to go public. Systems were not in place. Revenue projections were all wrong. Growth was not happening, and therefore, as I said, public market investors are rather more punishing than they punish more than other private because they mark their investments to market on a daily basis, while private equity and VC investors don't really have to do that. They can stay with you for much longer. So the results are there for all to see. The other aspect of of going public that many people don't really realize is that the concentration has always been on the initial public offer, but actually what the public market does is to facilitate further fundraising for you. So we have seen, I mean, just to give you an example which relates to India, we had on the AIM market a company called Codemasters. Codemasters was majority owned by the Reliance ADAG group. And when they did an IPO, Reliance ADAG had 76% of its equity. And they sold down, but they still had a majority. And Codemasters had a very, very good, a good period. I mean, they lasted on AIM for a few years, and they were able to raise follow-on money very, very quickly, anytime they needed it. And Reliance ADAG used those follow-on offers to actually exit gradually from the company until they completely exited. So that's an aspect of public markets that not many people concentrate on, especially nascent industries such as yours, because you're more focused on the IPO. But one big advantage of going public is that follow-on capital becomes easy. Just to give you an example, this year has been a really poor year for IPOs, even in London. Last year we had 126, this year we only had 40. The total IPO funds raised last year was in the region of $23 billion. This year is less than $2 billion. But public markets don't sleep. The follow-on capital raise has been $16 billion this year alone. So, when capital requirements are there, when IPO markets are frozen up, the follow-on market remains alive.
Yeah, so basically, I spent 4 years at King, and in the middle of my experience at King, so it was, I joined in 2014, they IPO'd, and then they got acquired by IBK. So I saw really the whole transformation. And based on that, I can really tell you that there is a trade-off when you've built a very successful game such as Candy Crush, and you want to really raise even more funding. So that's the main value proposition of an IPO. As it was explained, like it gives you access to a source of funding and to have iterative funding, so in a scalable manner. So that's a very positive story. But there are also two risks which come with IPOing and that you need to mitigate. One, and I've witnessed that at King when we did the IPO, there is always a short-term bias which can emerge when you do the IPO, meaning that at the leadership level there might be a focus on very short-termist initiatives to maximize the market cap of the company, and this takes a bit of adjustment. So there needs to be an adjustment in terms of leadership to make sure that we actually always focus on delivering value for shareholders in the long term. And I think the most successful companies in gaming, but beyond gaming, are those who can always have in mind the fun experience and what will make the product best in the long term for players, not what makes the markets happy tomorrow when the markets open. And the second risk that I see when a company IPOs is a distraction, because there are a lot of regulatory requirements. Once you IPO, you need to do a lot of reporting on financials, but not only, also in terms of ESG, etc. So you need to completely reorganize your leadership, and it requires completely different type of talent. You need to grow significantly your investor relation team. You need to grow your finance team. and this might eat up the time of the leadership to focus on other areas such as products, etc. So that's the second risk, but it's completely manageable. But once again, it needs to be adjusted over a few quarters typically.
Yeah, I think because it's a nascent audience, again, I would say don't think too much about an exit. I have a philosophy, and the thing is like this: spend the next 5 years building genre focus, genre expertise, in a global market, and probably after that apply the same genre expertise for the India market. Indian gaming market is going to be huge, okay? But the expertise that you build, building games for the global market is going to stay with you, and because you are local here and you understand the culture and everything, I think if you apply the same, the rules are the same. If you are able to adapt that and build it for the Indian market, I think you will have some of the, I think you'll have a lot of interest from global strategics, coming into the market because you have nailed the genre and you are local, you understand the culture, you're building local content. I think that will be killer combination for a lot of companies. Don't be in a hurry to exit. IPO is great, but it comes with its own distraction. Exits also come with a lot of distraction. I mean, yeah, I think because I'm a product person, and I've done an exit in my last organization. And when I was doing an exit, I had to build a team that was focused on exit then rather than focused on building a product. So it's a different mindset when you go into an exit or you go into an IPO. Look at building your expertise, and I think that's where you should be at. There'll be exit. Make sure you're making money. There'll be an exit either in takeover or IPO in some other way.
Manish, you want to add something? Thanks a lot, Rohit. So I think that brings the panel to an end. But I think it's leaves us with a very, very interesting message, right? It's the journey of the founder that is most important, even more than the end or the exit. When you start, you should have that coherent vision of sticking with it for a long period of time. Get along right kind of investor and people as you go along, and focus on the right things to build the right type of organization. If you have all that going, I think exit will probably seek you rather than you thinking about it at all. And that should be the goal. So with that, yeah, I'd like to thank the panel. If there are any questions, we can take maybe 1 or 2 questions at this point. There's one question there. Can somebody send a mic?
Hello, everyone. Yeah, I wanted to know how can a founder or a person who is doing a startup in gaming can keep going, because when you're in early stages, you find like a lot of downhills when you're making a game. So how can we push ourselves all the time?
Keep looking for motivation. I think there'll be a lot of downturns, like you rightly said. Keep looking for motivation. You should. There are 2 things here. One is to keep your spirits up, and second thing is to keep the spirits of your team up. And I think you should always get a little bit creative about how you are going to find your inspiration, how you are going to find your motivation, and keep persevering at it. There is no template for it unless Manish has.
No, I don't have a template, but I think I can just tell you 2 things. Here the co-founder really becomes very important. Somebody with whom there will be days when you are down, he's up, and vice versa. Just sit down, have a nice beer, whatever your poison is, and just chat it out. And I think that's why having that co-founder and he's literally for a startup entrepreneur becomes even more important than wife, because you're going to really spend 17, 18 hours working physically, but 24 hours, 365 days thinking about it. Because when you get into this entrepreneurship journey, your mind doesn't just stop, right? So having that person is important. Second, please do build 3, 4, 5 people who are your mentors, who are willing to give you time, whom you trust. That set of people in your life is super important, because while the co-founder is there, but both of you are doing operations, you're in it, but those 4, 5 people are seeing multiple things. Please do build that set of people around you, and I'm sure And good thing about our ecosystem is that people are accessible, approachable, and willing to give time. So figure that piece out.
Thank you so much.
Thanks a lot, Manish. One more
Hi, my
question.
name is Som. And my question is, given gaming as a product or games as a product are so nuanced, is it fair to assume that the investment that comes into the space has to always come from a set of bodies who understand what game metrics are, uh, as opposed to traditional investment where you have hypothesis, whatever, you have a product problem solution, and the scale itself looks very different. In which case, in the gaming ecosystem, it needs to be established that your Series A is always going to be a strategic arm, as opposed to a more traditional VCs, which we keep mentioning once in a while. And your Series B, C will always be a publisher because at that point of time it becomes a PNL management play as opposed to a product development anymore. Does that understanding or awareness need to be established, or do you see games or game developers having that mixed skill set to scale it beyond a point? And second, I mean, just a follow-up to that, is that at this point of time for Manish and Rohit maybe, how much do you see yourself as a game development company versus a portfolio management company?
So let me answer your first question, 1A, 1B both, right?
Sure.
See, as you rightly mentioned, gaming as a product is not, that's a bad product. Um, so gaming as a product is not solving a utility, convenience, or new category creation, right? Fundamentally, people are getting entertained, they are playing games, and you're saying that, hey, listen, my game would be better, and people will move to some other game to this game. Now, this particular thing, for a traditional VC to really understand, because they will ask you very standard question: what's your time? What's the problem you're solving? How are you solving? What's your right to win? Standard questions. Now, all of those questions, me as a gaming content creator can't have. Like it's me, it's my team, it's my capability. That's all I can sell you, and nothing else, right? And hence, it is super important to have gaming funds in seed and pre-seed who understand, who are coming from operator-driven funds, which is why I'm very happy that Lumikai, Saloni is there, Justin is there, good great combination, pre-seed. They understand those things, right? So I am seeing in India more and more evolution of such gaming-focused funds coming in. Now the 1B of yours, as the exits happen in India, there'll be more and more comfort in the traditional VCs to put in money in Series A, B, C, D, when you are kind of really looking at a set of games, a consistent track record, or your domestic market really starts becoming more localized content and content, because another problem statement in India is that it's a global market, it's export market, it's not a local content yet. So from an entrepreneur right to win, saying that I am creating local consumer-based, understanding-based games isn't really a proven thesis. But fast forward 6-8 years, it will happen. Like 10 years or say 5 years back, even the money and investment in gaming in India was very difficult. Today it is relatively become easier. In my opinion, that continuum, you will see more and more gaming comfort happening as differentiated thesis and nuance can happen. On the size and scale of the companies when they grow in gaming, to come to your second question, and Stillfront is sitting here, you look at Zynga, you look at EA, you look at any company, what happens when the scale is there? You can't really bet all your thing on 0 to 1 opportunities because you're responsible for shareholder value creation, and you want the needle to move at 30% growth or a 40% growth, for which means that you need to have a large set of revenue. You can't be always dependent on new teams creating games within your setup, because that has its own probability, its own gestation period. So to kind of maintain that, you would need to really look at good teams which have crossed that risk capital, are now are in a growth phase, and can you help them in growth so that you have your balance of your own growth between organic and inorganic balance maintained. And that's how things start moving.
Yeah, I fully agree with what was just said. I will just add that, you know, most of us here are in what is mainly a content business, and content business is very risky. it's a hit-driven business. It's very hard to predict the success of any product we work on at any point of time. So we feel that one of the key drivers that we can control to de-risk our investment is to diversify. The same way as you diversify your equity to kind of de-risk your investment on an individual basis. As an investor in gaming, whether you are a company or an angel investor, the best way to de-risk your investment is actually to diversify. And in our case at Stillfront, we diversify across different dimensions, right? We diversify in terms of geographies. So we have 23 studios operating across pretty much all continents. We diversify also across platforms. So we are on mobile, but we are also on PC, console, browser, and we have very interesting early stage discussions with new platforms such as Netflix or cloud platform of Meta. So those are ways that we see also to make sure that we put our eggs in different baskets. And last but not least, we have diversification in terms of business model. So we have some money coming from in-app purchase, but also we are getting some revenue stream from in-game advertising and subscription. So the combination of those three ways of diversification of our portfolio allows us really to have a much more de-risked approach in terms of investment.
Thanks a lot, Alexander. So with this, we'll bring the panel to a conclusion. Guys, feel free to interact with participants in the room, but we'll end right now. Thanks a lot, guys.